morning, everyone, and welcome to this GNF dedicated to the value chain of space finance. It is a great pleasure to have with us experienced professional from a sector that plays a crucial role not only in the global economy, but also in the daily choices of millions of people. Every year, we, as Foundation Amaldi, we organize this event during EAC, and this year, as was the case in Paris, the location gives us the chance, the opportunity to invite representatives of the entire innovation finance value chain, from technology transfer to private equity, including business angel, which I represent, from the host country, Italy, to give their opinion on what has been done and what is still missing for the space market to mature. In fact, space finance is today more than ever at the center of a deep transformation, from the technological innovation that are reshaping the landscape of launcher, satellite and downstream technology, to the challenges posed by regulatory changes and geopolitical evolution. The role of space is attracting increasing attention towards the sustainability of the ecosystem through responsible and fruitful investments. In these 50 minutes, the 50 minutes that we have ahead of us, we will listen to the views of representatives of the Italian value chain and discuss with them the main trends that are shaping the sector, and we will delve into the challenges and opportunities that await us at national and European level, of course. It is therefore with pleasure that I welcome Claudia Pingue from CDP Venture Capital, Matteo Cascinari from Primo Space, Michele Gallo from Alcedo SGR, and Giorgio Mariani from Deloitte Legal. So let's start with a brief presentation from each one of our speakers, starting with Claudia.
Thank you, Lorenzo. Hello, everybody. I'm Claudia Pingue. Currently, I'm a venture capitalist, mainly investing in deep tech and space tech startups. Basically, I've been working in the tech transfer sector for almost 20 years. In fact, after my degree in electronic engineering at Politecnico di Milano, I started working as a researcher in the same universities. And at the end of my research activities, I founded my startups. Then I managed the business accelerator of Politecnico di Milano. So basically, I was involved in supporting other researchers in creating their own startups. And then now I'm the head of Tech Transfer Fund in CDP Venture Capital. CDP Venture Capital is the biggest Italian venture capital company, mainly promoted by our government with the mission to boost the Italian ecosystem. And the Tech Transfer Fund is about a 400 million euro fund fully dedicated to investing in startup companies deriving from university and research centers. That's all. Thank you.
Well, first of all, thank you, Lorenzo, for the invitation. Well, I'm too old to talk about what I did in my life. So I will tell you what I'm doing right now. I'm general partner together with Raffaele Amaro and Giorgio Minola of Primo Space Fund, which is a Italian venture capital firm investing only in space. We invested in 16 companies, 11 in Italy, 5 out of Italy. Ticket size is, the sweet spot is 1 million, 1.5 million. The smallest investment was 300K. The biggest one was 5 million for the first installment, then follow-ons. And, well, basically, this is what we do.
Good morning, and thank you again, Lorenzo, for inviting me. I am Michele Gallo. I am a managing partner of Alcedo. Alcedo is a private equity firm based in Treviso. We are active in growth buyout investments in Italy. We are one of the most long-standing teams in private equity in Italy because we started investing in Italian SMEs in the late 80s. Today we manage 400 million asset under management. We raise money in Italy internationally from institutional investors, and then we deploy the capital investing in Italian SMEs with a high growth potential without a specific sector preference. Let's say we are a generalist approach. We invest in companies in all the sectors in Italy. And we are starting looking to the space economy because we see that there's a space that is not covered by any institutional investor following the VC, the early stage phase of the company. So we are here to start covering a gap that we have identified.
Hello, good morning, everybody. My name is Giorgio Mariani. I'm a global head of M&A for Deloitte Legal. Deloitte Legal is the international law firm within the Deloitte network, covering more than 60 countries and with 4,000 lawyers. In my 25 years of career, I've been spending a lot of time in private equity and venture capital, and my last passion is space.
Okay, thank you, everyone. So let's start. We have 44, almost 44 minutes ahead. Let's start with the first question, facing with the first problem. I mean, the first question is going to touch the heart of what fuels the path from idea to innovation, technology transfer. And it is probably one of the two biggest problems in Europe, not just in Italy. So I leave the floor to Claudia, asking to give to our audience an overview of the national panorama. What are the main Italian assets to develop startups and venture capital in the space sector, provided by GDP?
Thanks, Lorenzo. Yes, well, I really believe that Italy is the right place to develop deep tech startup in space startups for many reasons, but especially because we have competitive assets both in research and in manufacturing. For example, in the space sector, we are among the first country in Europe for our research results, for our scientific publications, and our researchers are among the most cited in the world. And on the other end, we are the third country in Europe for in-space manufacturing. In Italy, as of now, we have more than 4,000 companies active into the market. And basically, those companies are covering the entire aerospace supply chain. And it's very important because that means that we are able to industrialize our tech ideas, our patent technologies. And so I really think that the biggest opportunity in the next years for space sector is to transfer our best minds, our technologies from our labs to market through the creation of startup companies. And it's really important given that the space sector is gradually open its door to private company, and those companies can bring effective innovation into this kind of market. But we have a problem, of course. And in fact, as of now in Italy, just 10% of all the Italian startups have been derived from universities or research centers, while in the most developed ecosystem, this percentage has risen to 50%. And again, last year, about 100k euros have been invested in Italian space startups. So I think that we can do more and better. Basically, as GDP Venture Capital, we think that our strong research, our strong know-how, our strong asset are not still properly converted into value for our society, for our country, due to a lack of, first, money, of course, because to transform an invention, to transform a patent technologies into a suitable product for the market, you often need a lot of money, especially in the space sector, even before the startup is incorporated. So there is a long way to do. And second, you a lack of skills, because most of the time researchers need complementary skills, technicians need complementary skills to create successful startups. So as CDP Venture Capital, we are working on it. We have, as of now, we have 5 billion euros of asset under management. Those money are organized in different venture capital funds to cover the entire life cycle of a startup. We are specialized in specific tech sectors, and for sure space tech is one of our target investment area, in which we are carrying out different investment activities. For example, we are active with tech transfer initiatives, with acceleration programs, to strongly support the pre-seed and seed phases of our ecosystem, but we have also A+ and late-stage funds to support the scale-up phases. So basically an end-to-end approach to try to boost the Italian space ecosystem.
Thank you, Claudia. Matteo, you are clearly the second guest we want to address our next question. As we have heard, you are like GP of Primo Space, launched in 2020, but was preparatory activity began a few years earlier. Since it's an early stage fund, you are also the perfect guest to address our in-depth analysis. Many things have changed in 4 years, since 2020. And a lot, quite huge lot of operators are now on the market, but especially in the early stage sector. And all this has been possible thanks to the activities promoted by CDP. But I would like also to collect your opinion. So what is the current state of not industrial, but also financial policy to foster the development of European space economy?
Yes. Well, first, just a joke, Claudia.
Yeah.
For the audience, Claudia is part of CDP, which is our main LPs. So if you're saying that we have to invest more, tell your colleague to give us more money. We are going to invest more. But jokes apart.
Raise private money.
You're right. Not an easy game, but we're going to try. We're going to try. Well, the story, when we started, as you were saying, in 2020, but we started to study the market back in 2018. And at that time, and also when we started, so 4 years ago, we were the first and only at that time European, in continental Europe, VC investor specialized in space. There was Seraphim before us in the UK. So in less than 5 years, 4 years, now there are at least 5, 6, 7 specialized investors in space all over Europe. Then many other investors that are investing in space. So the scenario has changed a lot. But as you were mentioning at the beginning, most of the players are focused on the early stage phase. So we are experiencing in our portfolio some problems because those companies that do need a check of 10, 15 or 20 million, they do not have investors enough to talk to. There are now the European Commission do know very well this problem, so they are trying to put in place some actions to fill the gap. Somehow the gap has been filled because there are 2 main players, Expansion and New Space Capital in Luxembourg, that are investing in the Series A and Series B phase. So there are some investors, but still very few. So this is a gap that must be filled. And as I was mentioning, in our portfolio, we have a wonderful company, especially one, a Spanish one, that is asking the market for 15, 20 million, and they're struggling since 1 year probably they are going to close right now the round, but it's has not been so easy. It's been very difficult. So this is a gap that we must fill. Another example is the Orbit. Sorry for talking about an Italian company in an international audience, but the Orbit is well known internationally, for sure in Europe. For sure is the Italian champion within the startup field, let's say, and for sure is one of the main champions all over Europe. As somebody knows, they closed the round recently, 150 million round, so a huge round for our market. And the main investor is a Japanese company. So I think there's something wrong. I mean, there should be an Italian or European investor to lead these kind of investments. Again, there's something that has to be done. In my view, probably there has to be, I mean, there should be a financial policy, I mean, real policy, driven by institutions that try to shape a little bit the financial area, so keep on pushing on investments. I totally agree with Claudio. We must invest more and more, not only in Italy, but all over Europe. As you probably know, 70% of investment in space are coming from VC, venture capital. This is not the case in Europe and in Italy, so again, we have to fill a gap in that area. And I think this should be made also by some European centralized policies that can incentivize this kind of shaping of the market.
Thank you. So to close the arc of investment, equity investment in support the aerospace world, Michele, the interest of private capital operators towards the space economy has changed over recent years, taking into consideration your personal approach as a private equity operator instead of VC, so with a completely different approach to risk. And if so, how and why?
Yeah, thank you, Lorenzo. Yeah, the answer is yes, absolutely. The interest of private capital investors in these recent years has changed dramatically, in the sense that the interest has grown at dizzying rates in the recent years. A simple way to understand why, I read a phrase coming to this venue on a wall where it was written, "This is not rocket science, this is space science." That is a very simple phrase, but is summarizing what has happened in these years. Space economy is no more seen as a far world of astronauts, rocket scientists, but it's more and more seen as, it has been defined, the hidden utility that is underpinning our daily lives and economies. And this is mainly due to those 5,000 satellites that are flying above our heads, with a direct impact in our daily life, and also with a fundamental role in helping us in tackling the great challenges that we have for the future, the reduction of the carbon emission in the industry, the digitization of economies, preservation and protection of environment, simplifying the logistic flows. And this is something that is having a direct impact in our lives and our economy. And this has obviously increased the interest of private equity, private capital and private equity investor towards space economy. I read some statistics coming here from Deloitte, from PwC. The global space sector today is worth $470 billion globally. 77% is in commercial application, and it is growing. It is an expected growth for next year at 11% at least. Investment by private capital investors in this recent year have been, we can say, only $47 billion in 600 companies all over the world, in all the three segments of the space economy. Upstream, 22 billion, midstream, 5 billion, downstream, 20 billion, particularly in Earth observation, satellite navigation, and satellite communication. Looking at deeper in this statistic, we see that these 47 billion were shared by less than 600 investors, and 63% of these investors were new to the space sector. And they included 13 out of the 15 largest venture capitalists and 8 out of the 15 largest private equity firms. So this really means that something has changed. And what has changed? Simply has changed the risk-return profile of the space economy. Space economy was, a few years ago, an economy rated with a very high risk profile, dedicated to specialist investors and strongly subsidized by governments. Today, more and more private capital investors and private equity investors, because VC have already understood this much earlier than us, but we are starting understanding this, are more and more considering space economy as a real space to invest for having interesting returns in a limited time horizon that can be 4 or 6 years. That is the typical holding period of private equity firms. I totally agree with you. There are gaps to be covered, not only in the seed and in the early stage phase of life of a space company, but even more in the following phase, to accompany companies that are exiting from the early stage to a level of maturity in preparation of further growth step. That can be the IPO, that can be the access to a large industrial group. And we are here to start covering this gap.
Thank you. So it is clear now that there is an elephant in the room, so the lack of private investors, but I want to address now Giorgio. We collect a number of opinions spanning from TT to private equity, and you act as a connective tissue, and are at the side of companies in negotiating the contractual terms of investments. So, taking into consideration that the world is full of financial resources, and sometimes it is difficult to allocate it, no? And we are suffering a lack of resources as a space sector. My question to you is, it is maybe depending, it is because of a wrong timing of companies, entrepreneurs to seek for financial resources, or reformulating it, when is the right time for a space company to seek for a financial investor, and why entrepreneurs are sometimes reluctant, or maybe it is because they are reluctant to open their capital to financial investors?
Thank you, Lorenzo. So the two matters are indeed intertwined. A simplistic answer to the first issue could be when they need the funds to launch or expand their operations, but that would be indeed too simplistic. The reason to find help from a financial investor lies in many different angles, including when you're stuck with your strategy, when you have no clarity about your go-to-market, when you don't know who your clients are, and you need more than money. You need a combination of money and advisory experience, and also the ability to open doors in the space environment at the level of the biggest corporation, but also in the financial environment at the level of the banks or financial institutions. So what private equity and venture capitals do provide is so-called smart money, a combination of these two items. Now, sometimes entrepreneurs make recourse to venture capital or private equity too late, sometimes too early. If an entrepreneur doesn't know who the clients could be, what countries they should be investing in, what market they should be trying to penetrate, they will leave a lot of questions for the venture capitalist or the private equities fund to respond. And in a way, they will lose bargaining power in the negotiations. So why they should be reluctant. They should be reluctant or they should be concerned when they have no clarity in their business plan, in their go-to-market, in their offering. Because in that case, the financial investor might take advantage of the situation and say, since you have no clarity, I will retain a bigger portion of the governance. So this could be one area of concern for entrepreneurs, having very clear ideas before addressing financial investors regarding go-to-market, clients, expansion strategy, and generally speaking, strategy. I met many entrepreneurs with brilliant ideas, brilliant products, brilliant surveys, who never posed themselves the right questions about all the other areas. And this, of course, make them weak in front of the financial investors. Okay. The other reason why sometimes entrepreneurs are reluctant to have a partner is because they are concerned about the exit plan of the partners. We know the financial investors have to make an exit, and this has to happen sooner rather than later. Again, there are many ways, though, to discuss how to better conceive an exit strategy. So I do not think this should be the reason of concern that prevent entrepreneurs to make recourse to this kind of financial operators, including, and we will speak more about that later, the possibility to combine different instruments of financial intervention, from venture capital, moving to private equity, moving to IPOs. So there is a variety and a range of instruments that can be used that should pose the entrepreneurs in the direction of expanding their business without having too many concerns about governance.
Thank you. So you and Claudia both underlined that there is also an issue related to learning and knowledge related to investments, kind of financial culture that should be increased at any level. So, coming back to Claudia, it is a light and shadows of panorama, complex path, of course, and I want to make it simple because it isn't. But which are the specific things that GDP is doing, which is your vision on that, to gap the bridge between research and market? It's something that you mentioned before, and I said is one of the biggest problems at European level, no? Because one of the most active, we have one of the most active researchers and high rate in research or academia ratios.
Yes. Well, I can share what we are doing with our tech transfer fund. Basically, we have two different investment strategies because, as you have heard, we have a problem in each stage of investment. So we decided to approach with two investment strategies. The first is the direct investment. So we basically invest directly through technology transfer hubs in the first phases of the tech transfer process, where teams and techs are generally still in the labs. So basically, technology transfer hubs aims at speeding up the creation of new space tech startups, starting from the main research outputs. In fact, technology transfer hubs are, generally I say, are innovative infrastructure made of money and skills that have active collaboration with the most important research centers and universities to strongly support the pre-seed and seed phases. Basically, those kind of vehicles, of investment vehicles, invest up to 2 million euros for projects. Just to give researchers, allow researchers to carry out the feasibility studies of their technology and to spin out their ideas in a real company. And on the other end, we invest indirectly with the traditional fund of funds, technology transfer fund of funds, basically to consolidate the venture capitalists specialized in the same sector, in the space sector, and so also able to invest in space startups and make them grow. So basically, as of now, we have launched Galaxia, that is the first technology transfer hubs active in Italy. Galaxia has more than 30 million euros of asset under management. And on the other end, we are launching two different venture capital funds specialized in the same sector. And as of now, more than 25 million euros in the last 2 years have been invested, cumulatively invested by Galaxia and the venture capital funds in more than 20 technologies and new startup companies. So basically, at the end of the day, we operate with a dual approach. On the one hand, we are trying to increase the number of space startups active in our ecosystem. And on the other hand, we are trying to increase the number of venture capital funds, of private venture capital funds that could allow, that could finance the most promising spin-off companies. That's
perfect, perfect. Matteo, so a lot can be done thanks to this public intervention, but cannot and should not do everything. As Claudia pointed out, at a certain point, we have to look at the market, including private capital. And I'm now asking to you, once a certain stage of maturity has been reached, someone should take over from public support and put petrol in the system. What is jammed in this mechanism? Because you are here to support this evolution, but you cannot do everything with your money.
Well, one of the reasons is the one that we were recalling before, which is the lack of a real policy from institutions that can drive and shape the financial private capital market. The lack of private capital market at all over. I'm not talking about Italy, I'm talking about Europe. For sure, I mean, in Italy even more. We don't have, well, in comparison with the US, which is the driver when we look at numbers, we don't have the same capital market. We don't have the same level of dynamic for companies to go public. Corporations, it's another part that we are missing a lot. I mean, there are some companies in Italy and all over Europe that are doing very well, but very few. Doing very well, meaning that they are investing in innovation inside. They are making, are making open innovation outside of the company. They are also sometimes investing in funds, very few of them. They are having some corporate venture capital inside of the firm. But again, these are some exceptions, so it's not normal. In Italy, even more, we have a problem in VCs, not space VC, but VC. There are very few money, so a lot of big, huge corporation institutions, pension funds and banks and so on, investing, having a lot of money under management, do not invest in VC. Again, not space VC, just VC. So we don't have enough private money injected not only in the space but in VC, and then private equity. I mean, all this kind of. I think in VC it's the worst situation because private equity started 30 years ago, so 40 years ago maybe in Italy. So they do have a track record. Maybe a problem is that we don't have a track record in VCs because VC in Italy is very recent. So we can't show a real track record, and investors which are risk adverse, which is another cultural difference, tend to give money to those institutions, organizations that showed a real positive track record. We don't have it, neither positive or negative. We don't have it simply. And another last topic for sure is space per se, because most of the investors consider there's a huge misunderstanding. When you say space to an investor, everybody thinks about astronauts, international space stations, constellations, rockets, and so on. And they think that it's very risky, that there's a long path to profitability, capital intensive, and so on, which is absolutely the reality. But this is the reality for the upstream area. For the downstream area, which is the main driver of the development of the space economy, not the space industry, this is not true. So this is a huge misunderstanding. We, on our side, are trying every day to avoid, but there is this misunderstanding. So risk adverse, lack of capital, lack of financial policies from the institutions, no track record. I mean, several reasons why the private capital market is very low. Again, not only in Italy, but all over Europe.
Mm-hmm. Thank you. Michele, do you think that private equity could be an answer? I mean, the question is to make the hook closer, you know, it's something, if there is a risk-adverse approach, the question is to lower it, lower the risk level. And do you think that, what do you think could be the role of private equity in this mechanism, and in favor of a company operating in the space ecosystem, of course? And take into consideration also what Giorgio said previously, what are the timing and methods of the disinvestment we, as space companies, we should know to interact, to work with you, or company like you?
No, thank you. No, as Claudia has said before, there are plenty of gaps that have to be covered. And for sure, this is the right time also for the entry of private equity in the space economy, not only in Italy, but at an European level, because the market is getting more mature. VCs have done their role. There's a wealth of companies that is growing up. Private equity comes a step behind the venture capital, as I said before. So for a private equity fund, a company can be an interesting target for investment when they reach, let's say, some figures, 10 million turnover, a positive profitability, around a 10% EBITDA margin, a leverage ratio not so much above 3x, and with strong growth potential. This is what we look for when we scout our investment targets. So we are not the guys to join a capital round of 200 million made by public and private investors. Private equity cannot play a role in this kind of investor, but private equity can play absolutely a role in a company that has a plan, has a clear growth trajectory, and needs a partner that on one side can bring money, can bring the capital, and on the other side can work together with the management teams, with entrepreneurs, to define the strategic plan and to implement it. Then we are a generalist fund, a generalist investor, so we do not bring a specific competence in any company that we invest in, because otherwise we should be expert of everything, no? But we have a specific competence in accompanying companies in their growth processes. And this is what we have done in these last 30 years in many sectors. So we work together with the management team, leaving them the daily activity, and working with them to strengthen the operational structure, defining a clear strategic line, defining the prioritization of resourcing, for sure granting an easier and wider access to capital, both equity and debt, Pushing on innovation is fundamental for a private equity fund at all levels, so innovation from products to process and vice versa. So we work together with the managers to implement a growth plan in the view then of an exit that typically for a private equity fund is planned to come in a 4 to 6 year plan. Then the holding period can get longer considering the situation of the company or the market, but usually the average is between 4 and 6 in 6 years. So the ideal target for a private equity fund is a company of this kind that in a 4 to 6 year can complete a phase of growth that can lead to a further step. And the further step starts with the exit of the private equity fund. That can happen through different ways. Looking at the statistics that I was referring to before, for example, PwC has mapped 163 exits of VCs and private equity from the space economy companies since 2015. 43% were M&A takeover, means a sale to a strategic buyer, a bigger industrial group. 32% were replacement, so sale from a VC to a private equity or from a private equity to a bigger one. And then 25% were IPOs. And for sure, IPO is an interesting exit route for companies held by a private equity. And this is the exit that we typically pursue during our investments.
The real question is why you're mentioning my competitor statistics and not mine.
In fact, I was worried about that, but I didn't find a Deloitte statistic on this.
Could have asked.
Your statistics are not trustable.
I was worried. I was unsure whether to nominate PwC.
But you said something very interesting. Of course, the big absentee of this panel is the banking system and the whole world of the debt financing. Next time, we'll try to resolve them, even if we cannot organize a panel of 10 people, 2 hours long. You said something very interesting because there are also examples of space startups in Europe that, having reached a certain degree of maturity, have opted for the IPO solution. Indeed, a couple of years ago, it seemed that SPACs were like the solution, the panacea, they're supposed to be the panacea of all the problems of capital system that struggles the growth of startups. So, Giorgio, taking into consideration your role, no? I guess that is a huge part of your activity to assist companies during their IPOs. What are the key differences between going public through an IPO and parting with a financial investor? I mean, it is a viable, doable solution for space startups for what you learned about the sector?
Interesting question. There are pros and cons in both. And when I talk to entrepreneurs, sometimes they tell me, oh, we would like to consider the IPO option as our first best because we don't like the idea of sharing the governance with a private party, and we don't like the idea of discussing exit methodologies. So we want to retain the governance, and that's why we're looking at an IPO. Now, again, there are pros and cons in both solutions. Private equity is true. They will retain a portion of the governance. They will have some veto rights, and they are aiming at a nice exit. So these issues are indeed on the table. At the same time, IPO is really a complex proceeding, and it has a a number of layers of intricacy that perhaps are not always visible. First of all, the company needs a period of preparation because it has to comply with so many requirements, including accounting reporting that has to be made on a monthly basis in order to be able to provide quarterly or semestral reports. Plus ESG compliance, any other kind of possible compliance, continuous discussions with regulators, which entails having a structure and a number of bodies that will create bureaucracy, complexity, and cost. The IPO proceeding per se is remarkably expensive, something north of $500K dollars up to a couple of millions based on the size of the company. And these are all the visible, immediately visible issues, right? Then you have to deal with a number of stakeholders. You have independent directors, statutory auditors, independent auditors, activist shareholders, very bad word for people that make troubles for a living. And we met one last night. And these, again, are almost semi-visible issues. Then there is a world of managing stakeholders and notably shareholders' expectation, meaning that whatever you say as a CEO may have a direct impact, whatever statement you make may have a direct impact on the pricing of your shares, which means that you need to be transforming yourself from perhaps a technical space engineer to somebody whose predominant occupation is to give statement, deal with the journalist, deal with the public, and having every day something incredibly exciting to say in order to uphold the value of your shares. And this entails a level of stress not all entrepreneurs are ready to bear. So we need to be very careful about what we wish for. The IPO still is a remarkable way to make a great exit, to raise fast capitals, to open doors, and to enhance the visibility of the company. But is it the first thing you should think about as an entrepreneur? Perhaps a combination of private equity to prepare your company, to structure your company in a proper way, and to start your transformation journey from a technical person, a business person, to a finance person. That could be a smart combination of tools. Let me just conclude saying that the European Commission is releasing a set of rules to harmonize and simplify the listing of medium-sized companies in Europe. It's called the Listing Act, and this will be a boost for a new wave of IPO. This is going to be in force in November, December, and will help dramatically middle-sized company to reach their potential.
Wow, thank you. It was an interesting discussion, which I invite those interested to continue offline with our speakers. At the same time, I invite you to consult the report that Fondazione Amaldi and the room produce every 6 months together with the European Space Agency and the EUSPA, which is freely available at the Fondazione Amaldi booth and until 4:30 p.m. and in any case online on our website. Well, I would like to thank our speakers and invite the audience to give them a big round of applause. Thank you.